The Weekly starts now.
Katie Beck and I had the opportunity to work together on an article that appeared in ProBuilder in February 2020 about liability insurance underwriting. And I'd love to spend a little time today just digging deeper with you, Katie, on some of the things that we touched on in the article, starting with the notion that underwriting home builders is difficult and daunting for insurance companies. Can you tell us a little bit about why?
It can be, definitely. Insurance companies in general utilize historical data to try to project future losses. That's how we look at all of the different lines of business. For home builders, that data that we're using to try to project future losses is really hard to get your arms around. It's also hard to get the data. So it's hard to get your hands on the data and hard to get your arms around it once you have it. There's a lot of different things that contribute to losses for a home builder, whether it be something that happens during the course of construction that as a carrier I'm going to know about pretty early on. Someone slips and falls in a model home, that might happen, and that's something I know about pretty early on. But then you start to get into the meat of the home builder policies, which covers construction defect, which, as you know, in the builder space, it could take 5, 6, 7+ years before we really know what a construction defect loss is going to look like. And then we've got litigation claims too, and those come in really at the ninth hour, right before the statute of repose expires, and we might not see those losses come in until 9 or 10 years after a home sells. So the number of different sources of loss, as well as the long timing of when those losses come in, make it really hard for us to project losses. If you couple that with the market changes that we've seen over time, whether it be the big boom in the mid 2000s, the decrease in the late 2000s, the changes in the builder processes and how they do things, builder codes, all of those different things push and pull on what the losses are going to be. So it just makes it a really difficult line of business to project what future losses are going to be for those builders.
How do you think this has affected the current market?
Well, it's definitely always affected the home building space. The market itself just does not have a lot of stability historically within the home builder space. Right now, we're seeing a lot of different lines of business within casualty, seeing rate increases, seeing self-insured retentions increase, and seeing capacity in the market decrease. And that is definitely happening in the home builder space, I think almost at a more rapid rate than in many other lines. So carriers that used to offer this coverage, many have just pulled out of the line altogether. They're no longer writing home builders. Many have decreased their capacity. So when they used to put a $25 million limit up, for example, now they maybe only do 10 or 5 in some cases. So it's becoming more difficult for carriers or for builders, to buy a full tower of insurance that they're used to buying.
So in this context, how should a builder best present themselves to insurers?
I think with all the changes that we see in that historical data we talked about, it's really important for builders to look for an opportunity to tell their story to an insurance carrier, not just hand over a submission. Look for opportunities to talk to the underwriters and the other team members at the carrier about how they do business, how things have changed over time. We know builders build a very different house now than they did 10 or 15 years ago. Things have changed drastically. Technology has changed. To me, it kind of comes down to tell the carriers how you're going to protect your brand. That means, how are you getting the right subcontractors? How are you treating your customers long term and making sure that they're providing referrals because they've had good experience with you? One other thing I think to watch for, especially for larger builders, is insurance carriers aren't looking for the same information as investors. A lot of times we'll see investor portfolios come through, and where the information is really good in the investor portfolios, we like different context around it. Using it, one example of growth, for example, is investors like to see growth in builders or in their investments in general. And insurance carriers' growth is kind of scary. You know, how are you growing into new markets? Are you doing it in a way that you can maintain your quality control and your different processes you have in place? So looking for that opportunity to tell a story and making sure you're delivering things in the right context, I think, is really important.
So let's say that I'm a builder who has experienced some pretty significant losses. How do you think I should handle that with my broker and underwriter?
I wouldn't be scared of your losses. I see a lot of builders that really shy away from wanting to share their loss experience. And to me, I would use those losses as an opportunity to showcase and spotlight how you've modified your business or your practices to make sure that doesn't happen again. Every large loss to me should be a lesson learned. So what was that lesson you learned? What did you take away from that? Is it a product you no longer use? Did you find a subcontractor that just wasn't working in the right way for you that you needed to replace? Was it an issue? What are some of the things that you've taken away from that large loss that's made you a better builder? To me, that's the important context that you want to provide around loss history.
Right. What have you learned from your mistakes?
Right.
So we're seeing such changing trends now in the building space, modular components, modular homes, build to rent, the list goes on and on. Do you have any tips from the insurance perspective for builders that are expanding their businesses in these ways?
My number one tip is talk to your broker. Talk to your broker about the various components you're adding to your business. We are, as you said, seeing a lot of builders calling and saying, hey, we're going to do a build to rent project. What does that look like? We're going to build our own properties to rent out and keep them. We're going to start using some modular components. All of those things can trigger your coverage in a little bit different way. So you want to make sure that the policy is set up to account for any of those different coverages. Home builder policies have gotten pretty specific to home builder exposure, meaning you build a house, you sell it to a third party, you provide the warranty. Anything outside of that kind of normal business scope, you really want to talk to your broker to make sure that you're addressing that. Within our own policy, we've done a lot of conversations around this type of exposure and how we are going to react to it. Are we going to need to create additional endorsements? Do we need to carve those out and do different policies? It's all going to be a little bit different for each builder and for each carrier. So you definitely need to talk through those exposures with your broker.
Awesome. Well, Katie, I hope this is helpful to the audience. I'm sure it will be. It's good information. And thank you for your time today.
Thanks so much, Jenny.